afternoon, everyone. I'm Charles Payne. This is Making Money. A lot going on, right? It looks kind of quiet outside of that one hot niche. Of course, I'm talking about the stadium cheering inside the AI world. Nvidia's got the crowd on its feet, folks. You know what? I grew up in the 1970s, right? And my favorite baseball player of all time, Reggie Jackson, who earned the moniker Mr. October, right, for his World Series performances. In fact, this is 1977, three separate first pitch, bam, first pitch, bam, first pitch, bam, right? I mean, the guy was not bashful, right? He boasted that, hey, I am the straw that stirs the drink. And it was true. And that's the case with Nvidia, which is rocking today, knocking the cover off the ball last night. Not only did they post these amazing earnings, but guidance was phenomenal. But here's the thing, in recent quarters, Nvidia shares have actually slumped after impressive results. So what's different this time? Well, beyond the numbers, I think the conference call, particularly the CFO, Colette Kress, she was phenomenal. In fact, the stock was initially down. She started speaking, she turned that thing around. Also, the company provided guidance. It hadn't really been doing that. That was essential because not only did Jensen and company tell their own story, but they also clarified the impact, the magnitude of the AI revolution. They are the straw that stirs this drink, and boy, oh boy, what a straw it is. Let's take a look at these numbers for a second, right? If you hadn't seen it already, the two main businesses, hyperscale, cloud, industrial, and enterprise, up 102%, data center up 117%, revenue $96 billion. This is 3 months, $1 billion a day, up 106%, gross margin 75%, operating margin 66%. I mean, it's just absolutely phenomenal. 12 analysts raised their target on this stock, but this one, believe me, a call is out to the guy at Raymond James. $515. In other words, you know how folks come on the show and say, well, it's a $5 trillion stock. It's going to be tough to get it to 6. They're saying no, 13 trillion. 4 maintain their targets. By the way, no downgrades that I can find. I got to bring in IO Fund CEO, lead tech analyst, Beth Kindig. Beth, I mean, golly, it was everything you said it would be and more. So let's kind of walk through these numbers. I went through your note, and it's interesting because you kind of focused on not the hyperscaler part of the business, but the other part that's generating this revenue.
That's correct, Charles. A major takeaway last night is that Nvidia proved it may not need hyperscalers as much as the market thinks. Although hyperscalers do represent half of Nvidia's revenue, it's really those non-hyperscaler customers, so AI clouds, neo clouds, enterprises, they grew even faster than the hyperscaler portion of their data center segment. And what's mind-boggling, Charles, is that even though the CFO says they're expecting 1.3 trillion in CapEx next year, and if anybody knows the number, it's Nvidia, that number doesn't even include the non-hyperscaler segment. Wow. So it's 1.3 trillion in CapEx plus some for Nvidia next year.
And this chart here, so in this report, 40 billion versus almost 49 billion, but you go down to the first quarter of 28, 64.8, 66.2. Just to your point, just absolutely remarkable. And this gets to some of the pushback, right? A narrow number of clients, a narrow number of customers. That was one of the bare arguments against it. Another thing you pointed out that I thought was interesting, the tokenization, right? Lifetime token output, AI factories. I want to start first with the token side. We know tokens are going through the roof, particularly like with the bots, and the humans have very little to do with it anymore. But explain the correlation between the token usage and how it justifies the increase in price.
Yeah, absolutely, Charles. Last night, Nvidia guided for 70% growth next year. Analysts were expecting 45% growth. How can this company do that? Right. Well, it goes back to lowering token costs. Rubin will be lowering token costs by 35x. Now, Goldman Sachs has forecast that token processing will reach 47 quadrillion per month. There is plenty of room for Nvidia to engineer better systems to drive down token costs and justify higher prices. And that is exactly what is driving that higher guide next year.
This is that Javon's paradox, I guess everyone talked about. Prices are going this way, usage is going this way, and it all benefits Nvidia. This is exactly what Nvidia wanted. I got to ask you a little bit about this, the AI factory platform, right? Jensen, they seem like they're always about 3, 4, 5 years ahead of everyone else. We know it's not just the stacks, but also the CUDA system that you introduced, that you taught me about a few years ago, that kind of keeps them in this sort of lead position.
Yeah, and Charles, last night it really was about broadening the AI trade beyond big tech. In one area, Nvidia has the market cornered is AI factories, and that's because they're combining compute, networking, storage, and software. Now, it's not only the complexity of combining all of that, it's also securing the supply,
Right.
and that is something that enterprises will never want to take on their own. And that's why the non-hyperscaler trade really does matter, because companies, neoclouds, enterprises will always look to Nvidia for those AI factories.
What about Jensen's comments about, seeding, backing these names up? The pushback is this is circular financing, it's gimmicky, but he's saying, listen, these kind of startups, it's hard to find the billions of dollars that are needed, but it's essential and there's nothing gimmicky about it.
Yeah, and I would almost look at it company by company. If we look at Nvidia's financials, you stated this already. Very impeccable financials. They can really afford to start to help finance this build out.
Right.
And there's really no threat to Nvidia's financials by investing in these up and coming companies.
Revenue per gigawatt. A few years ago, I think it was like 30 billion. Now it's 50, 60 billion dollars. You can see the 1 gigawatt platform. We go from the Opera to Vera Rubin. It's 18 to 40 billion. How sustainable is this? This is, again, it's hard because the numbers roll off our tongue, but in real life, it's mind-boggling, this kind of pricing power.
Yeah, it really is. What you described was a 2.2x increase in revenue density from the exact same power envelope. Now, NVIDIA's customers will not be able to secure infinite power. The goal for NVIDIA would be to double the revenue generated, increase token output within those fixed power envelopes, within those fixed gigawatts.
Right.
And that's exactly what they're doing.
There's one thing that's been bothering me today, memory. The things that they said about memory, the demand, the pricing, maybe it's even a reason to give up a little bit on the margins. Memory stocks were up pre-market. All of a sudden they got hammered. So I'm reading CXM, the Chinese memory name. There was also some news out on them about the DRAM supplying 50% of China's DRAM. Is there this competition, on the memory side of this story, which should be higher? These stocks are struggling today. Is this something we should be really concerned about as investors? A lot of people watching this show, they own Micron. They want to know why it was up $35 last night and it's down today.
Yeah, memory has been a wild ride in both directions. What I would say is that inference especially is only going to increase memory storage, KV cache offloading. It's nearly impossible, 99% probability that memory is nowhere close to the cyclical top. And it's only because inference is in its early stages. How could inference be in its early stage and memory top? It makes absolutely no sense to me.
Right. So hang in there, folks.
Yes.
Hey, Beth, congratulations. You have been killing it. I'm glad you came on yesterday and today. And by the way, after you said you liked Lumentum yesterday, it surged. It was the #1 stock in the entire market. So again, your work is phenomenal. Thanks a lot. I'll see you soon.
Thank you, Charles.
Hey,